Hi, I'm Mike Cintolo, Chief Analyst of Cabot Growth Investor and Cabot Top 10 Trader. I'm here with your Cabot Weekly Review. I'm recording this late Friday morning, as usual, on May 19th. So nothing's really changed overall with my view of the market or growth stocks. Big cap stocks strong, broad market, not weak, but just kind of floundering. And individual stocks, basically a minefield where, some are making it through, but a lot are just stepping on a mine and blowing up, even on good news or rumors or rotation or whatever. Now, with that said, I will say I'm intrigued by this week for a couple of reasons. Number one, yes, the NASDAQ went up and big cap tech, but kind of everything went up. You had all the indexes up, at least coming into Friday, 2.5%, 3%, some a little bit more. You had growth indexes up, same sort of thing, 2%, depending where you're looking, 2 to 4%. Meanwhile, you finally had the defensive areas, consumer staples, utilities, mega cap like healthcare, stuff like that. Not crash, but they were down 1 or 2%. Interest rates have gone up. So it's kind of a step in the right direction. And in terms of like the big cap thing, don't get me wrong, it is narrow out there. I know there's some people saying, oh, what are you talking about? There's 300 stocks that are within such and such. Hey, if they all kick into gear, I'm in. But at this point, there's very few stocks hitting new highs, even though the indexes are running. That said, it is big cap, which tells you, hey, maybe the institutions are starting where it's quote unquote safe. And then maybe they'll move down the food chain a little bit into more, not speculative, but more growth-oriented situations. I find it more encouraging, I guess, compared to, say, if it was just meme stocks or, a clinical trial where a biotech stock with no sales or earnings gaps up. That doesn't tell me much about what Fidelity and T. Rowe Price are doing. So anyway, I would take this week as a step in the right direction. Maybe you just, one notch up on the scale, on the bullish scale sort of thing. But overall, I'm still cautious. I'm still patient. But my antennae are up because of the trading range, because of the setups. We've seen numerous rejections, of course, over time. But if we got going, I don't think it's going to take 7 weeks to say, oh, okay, yeah, I think we're getting going. I think it can happen relatively quickly. Or on the downside, of course, a couple of bad weeks, 2 or 3 bad weeks. Hey, maybe we have another leg down. So we'll see how it goes. Right now, we're still about 2/3 cash in Cabot Growth Investors model portfolio. But if things kick into gear, I'm not going to be fully invested next week or anything like that, but we could put money to work here and see how it goes. Right now, though, I think a little bit more patience and having your watch list ready, but patience as we see how this develops, okay? Let's hop on the charts as usual. I'm using MarketSmith. It's a program of Investors Business Daily. You can learn more at marketsmith.com. And, I'm going to run through the major indexes. Nothing's really changed except for the fact that we have seen the NASDAQ stretch higher here, which is a good thing. So now we're out to 9-month highs. The number of new highs, I'm not going to pull up the chart, but take my word for it. Yesterday, Thursday, was 115. That's not a lot. It's not, I wouldn't predict anything because of that. It's just more descriptive than predictive, I think. But even back here when the NASDAQ was, a couple hundred points lower or whatever, you had 100 stocks hitting new highs, round numbers. So, it's still relatively thin. It's narrow. It's obviously led by the big cap, the mega cap stuff for the most part, okay? S&P 500 is battling. Everyone's talking about 4,200 here on the S&P 500. I'm not a big level guy, but, I am a trend guy, and it's held the 50-day line. And if it can get up and out here, again, it would be at the highest level since last August. Conversely, you have the other stuff bringing up the rear. We are up this week on, this is IWM, but, you step back. We're still like kind of in this box or whatever you want to call it the last 6 weeks. Same thing with MDY, which is mid caps. And pretty similar with the New York Composite here. You can see this. Now, again, you've kind of been in this range for however long. So I'm not a levels guy with indexes. I think I've said that 100 times. But, it wouldn't take more than maybe a good week or two. All of a sudden, this is out here and the S&P and NASDAQ are at 9-month highs and small and mid caps are kicking into gear. That's why you just want to really stay on your toes at this point, because it's not like I've said this before, it's not like we're down here where we could rally for a month, which would be nice, but it's not really going to change that much. There's not going to be much stuff to buy. Right now, I think there could be a lot of stuff to work with, but we got to see it continue to work, okay? The positive stuff here, actually, one more negative is just on the landmine thing. So we're still just seeing stuff like this. This is on holdings, ONON. You had this huge IPO base, bottom, a little bit of a, whatever you want to call it, bottoming base. Massive volume breakout, pretty good sponsorship, great numbers, good earnings report, stocks acting fine, and then it falls apart, okay? Now, we have seen some of these, like I said last week, sort of shake and then snap pretty quickly. So I'm open to anything, but we're still just seeing, like I said, the minefield where things look good, they act well, they're not overly hot or anything. There's no red flags and then they just explode, sort of thing. So that's why, to me, this is the biggest reason why I'm still relatively cautious, because the things that look good today, or at least the things that looked good a month ago, say, maybe they're still holding up today, but very few are much, much higher, right? Some of them look bad, they blew up. Some of them are hanging in there, but there's not like there's money being made and there's a ton of stock envy, okay? So this is definitely still the environment until proven otherwise, okay? Now, with that said, this week, I don't want to get too granular about this week, but, this is the IPO fund. It's up it's a volatile fund, you can see. It's got this nice little bottoming area. It's up 3% this week. The IWO, which is the Russell 2000 growth, as I record this, it's up 2.1%. The semiconductors, SMH, is up 8% this week, had a really big week. And really on the daily chart, what I like about this is we'll talk about a few semiconductor stocks in a second, but it really was kind of the growth sector leader almost, I guess I would say, coming off the October lows. And then it has kind of had this little base on base action, just call it a, 2-month consolidation. And now it's kind of accelerating higher. Now, it looks like it could be ready for an intermediate term move. These days, intermediate term moves last like 2 weeks, so we'll see how it goes. But seriously, it does look good, and a lot of stocks in that group look good. And this week it was good. My point is, this week it's up 8%. Conversely, you have XLP, while the indexes are up 3% and these things are up 2 or 3%, this is down 1.5%. The XLU, which is utilities, is down 3.5% or whatever. XLV is down 0.5% or whatever. But the point is some defensive stocks have come off while the growth reasserted itself. It's just 1 week, but let's see how it goes. It's not like we're starting in the dregs, okay? On the positive side of things, like I keep saying, it's not hard to build your watch list of names. It's not like they're all perfect, but it's not like, you're dealing with 3 stocks sort of thing, okay? And I'm not even talking about the Apple, Microsoft, Google stuff. I'm talking about actual potential leading stocks, okay? In the chip area, we've mentioned ACLS. Last week, I think I highlighted this as one of these potential, I call it a shake and snap. And then it just, not only did it kind of get above the 50-day, but it just raced all the way to new highs. Very nice action. Not enormous volume, but, very nice action, pulling back so far today. We'll see how it goes. It comes right back down here. That's what I mean. You still have to kind of, the burden of proof is still a little bit on these stocks to hold up and that sort of thing. But ACLS certainly looks good. ASML, I think I mentioned this last week too, but this is sort of more of a blue chip, chip equipment name. And again, it had this sort of off the bottom rally from October, and then it's just had this nice tight, I think it was like 15 or 16% range, $700 stock, but it's still growing fast. It's a, foreign company. And you can see here it's threatening the $700 level, which is really, new highs. So we'll see how that goes. LRCX, Lam Research, another chip equipment maker. If we, let's see if Market Smith wants to, here we go. What I like about this is you've kind of had this volume cluster down here on the daily chart. And again, same sort of pattern. October was the low for chips. A jagged advance, but basically an advance into like mid-February, early February, mid-February. Bases out for a couple of months and now kind of letting loose on the upside. And again, you kind of see, last week I mentioned gap and goes, stocks are gapping and you're starting to see a few that are kind of extending higher. So, when I see more of this where it's just kind of day after day after day of buying, you're seeing it in the chip stocks. It's kind of limited there, but it does kind of, again, I'm kind of looking for breadcrumbs that the institutions are playing, okay? The other one I'll just mention, there's a bunch of chip stocks, but this is RMBS. You're not early. This one had, if you look at the weekly chart, it actually was hitting a new high almost last spring and summer. Finally went on, finally got pulled down. But it's been running a little bit more, but obviously this week looks really good. Just fair, just to be open, we advise taking partial profits in top 10, but holding the rest and, see if this thing can kind of pull back here, maybe offer another entry, but certainly looks good, okay? Just elsewhere, this is just kind of random stocks and sector. This is Dynatrace. Datadog has come out. DDOG, which is Datadog, has done strongly off the bottom. I'm not big on the off the bottom names just because usually it's not like this just does this. Usually it kind of then will build a structure. Dynatrace, which is kind of in the same group, that's why I mentioned it, which is DT, kind of already did that. It had the sort of off the bottom move with a nice earnings move in January, I guess it was. And you're going to see on the weekly chart, not the most perfect base, but a nice base. And then a really nice, kind of almost like a upside follow through this week on earnings. And again, just look at the growing kind of volume here. Doesn't guarantee anything, 50 round number resistance, that sort of thing, but looks pretty good. Good story, good numbers, so on and so forth. Netflix, it's not really my kind of stock. Turnaround, well-known, there's old overhead. I'm just flagging Netflix as another one of these sort of big mega cap liquid names, $160 billion market cap. If you're an IBD person, this is kind of I don't want to say perfect, but it's kind of a pretty nice cup with handle with tightness and now volume on the upside. Yesterday, this was Thursday, trying to kind of break out above this level. We'll see what happens. I'm just sort of flagging it. The more of these, whether you buy them or not, the more of these you see, the better. I mean, it's telling you that institutions are getting involved. So we'll see how it goes with that one. DraftKings, I've mentioned this a few times. I like the look of this sort of pullback. Maybe it has another wiggle or two in here. We'll see. But, nice earnings move here. Very dry up volume. Nice move yesterday on volume, kind of off the 25-day line. So that obviously looks pretty good too. DoorDash, I like, Uber, I think does have that liquid leader feel to it if the market can hang in there. This was sort of before and after earnings, after this test of the 40-week line. And so far, this was the earnings day right here. Let me get rid of all these random tick marks I'm making. This was the earnings day here. So it's been holding above that. Not that that's the be-all, end-all or anything like that, but it's been holding above that here for a couple of weeks, which is a good sign. I just mentioned Dash because it's sort of confirmation, possible confirmation in the same group. Again, kind of one of these bottoming bases where it had not a very impressive rally, but kind of based out here. It's hard to see, but there was some weekly tightness in here, and it's kind of pushed higher on some volume. Obviously, you'd like to see it continue, but still growing fast, and one of these names that, totally went through the ringer. So if the group is moving, if Uber, of course, Uber's delivery and ride sharing, but if that whole thing is moving, that could be an idea. Aerospace, just mentioning Boeing. I keep mentioning this just because Boeing, believe it or not, can trend. It's in the Dow. I know you don't think it can, but it just, these things, it can move. And all of a sudden over the year and a half, the stock can, double in a year and a half or something like that. And you just have this very long, tight, it's going to be tight because it's Boeing, but this long, tight area. And if somehow this thing can just sort of really pop out of here on some good news or cash flow or buyback or who knows what it is, I do wonder if it could be kind of a, a slower moving but positive name. Transdigm is another name in the group. Again, an $800 stock, not my favorite, but still, this one had this huge long-term breakout, went up, got shaken out with the market. I believe this was in March. This was during the March shakeout with the banking crisis, but just been kind of cutting higher from here, new highs after earnings. So that's an interesting group. Biotechs I still like. Intracellular looks good. It's starting to pull back. You'd like to see it maybe pull back more, just, maybe the 50-day catches up, but that's an idea. SRPT, I'm just mentioning this. I hate these, I do hate the names that are, look at this, gap up, gap down, gap down, gap up. It's crazy. I'm flagging it because I think, news did finally come out here. I think they're going to get approval, or it looks like it. If the stock, big if, can kind of level out here somewhere, maybe it sets up for you. Exact Sciences looks good. EXAS, nice, sideways, kind of reminds me of like Shake Shack from a couple weeks ago. Very nice sideways move, breakout on earnings. Biogen, this is obviously a bigger, little bit slower name, but many weeks up in a row. And then on the weekly chart, it had 2 straight nice accumulation weeks, and now a pull back to the 25-day line. Do what, take it for what it's worth, but not so bad. And just a couple more, solar names. These are kind of in the same group. This is ARRY, ARRY. Kind of crazy in here, but at the end of the day, it's kind of had this basic base building effort. Let's see if it can follow through on the upside. NXT is in the same group, basically. They do similar things, similar products. Newer issue, so it's going to be a little crazier, but nice volume breakout. And this week, it's held pretty firm in here. Don't get me wrong. Daily basis, it can move around, but NXT is kind of interesting. And just one last one I'm going to mention. They do have earnings coming up in 12 days. So they have earnings on May 31st. But this is always a fundamental name. You always kind of have your, cocktail party name. But CrowdStrike, this is the old cybersecurity, not old, but cybersecurity company. Had a big run, was a leader, topped with everything else, got destroyed. Sales and earnings, it's slowing down, but it's still growing fast, huge cash flow. And just noticing that the stock has really, it's been one of our old kind of tricks of the trade, I would call it, is, 3 months of positive momentum, which means 3 months of outperforming the market. So not just, not just a stock that's doing this, underperforming the market, and then goes nuts for 1 month. Well, that's great, but it's still kind of in its downtrend. So you kind of had this rally here. Obviously, it pulled back. Cybersecurity stocks got hit. Now it looks like this RP line might be kind of nosing out to new highs. I'm not saying to do anything with it. It's not even on my watch list, but I keep a distant eye on it. Let's see what happens on earnings, but I do see some of this stuff. Maybe you're going to get a couple turnaround situations in the cybersecurity group. So overall, there is stuff to work with. You're dealing with a lot of like, this looks pretty good. It's got good action, but it also had good action, a month or two ago, and then it came right back in. Or it looks pretty good. It's got action. It's got pretty good action, but it needs to break out. So there's a lot of things like that are positive, encouraging. I like what I see, but it's not like, oh yeah, I'm going to put on 3 big positions in these 3 stocks. I'm very confident that they're going to be, liquid leaders or something like that. It's still kind of a lot of thinner names, a lot of volatility, still a lot of minefield type of action in there. So that's why I'm still cautious. But like I said earlier, I know you can say it every week, but really have your antenna up, make sure your watch list is in place. It's okay to do some nibbling, and let's see how it goes. If, this is sort of an advance that's starting with the mega cap stocks where the institutions feel most comfortable. And then, the Fed or the debt ceiling, something gets settled and now they can get on a little bit more faster moving stuff. And then all of a sudden the broader market comes into play. You can kind of go down the list a little bit on the totem pole and see how it could work. But as always, we need to see it happen to begin with. This week was a good start, but now we just kind of want to see it follow through here for a week or 2 or 3 going forward and see some leaders emerge. Okay, that's all I have to say. As always, thanks for listening. Be sure to come by again next week for another Cabot Weekly Review.